Can you hear me now? How about now? Can you hear me now? Time for a little Verizon action. Remember those commercials? Yeah, we do, Bart. Corny dad jokes. We love them. So, got to take advantage of a green day. We got ourselves a green day going on at Verizon. Up today, it was up at what? 37.69 at just after noon today. It's currently trading at 37.30. We just had 14 call contracts expire at full profit on Friday. So I thought, let's look at another trade on the Verizon since we have freed up those 14 contracts. We have, you know what, let's go back and see what our position is. We have 1,421 shares of Verizon at an average cost of 37.66. What's it at now? Oh, it's still under that. So right there, it shows our total return at nearly, just over $500 in the red. But I thought we could take a little action Jackson. I don't know why I can't say those two words together. Action Jackson. Hey, there you go. You got it. Good for you. And your gold star for today. So if we look at trade Verizon options, it's hard to get premium on AT&T and on Verizon. I have both of them. We like their sweet dividends, right? Currently, look at that yield. That should be a red flag, Bart. It is. It is a red flag, but it's also 7%. We like that, and we feel that they will continue to pay it. They have an ex-dividend date of April 6th, so we don't want to risk our stock between now and then because we want to collect another dividend. But if you look at their dividend history, it shows us that they have 22 consecutive years of dividend payments and 18 consecutive years of dividend growth. In fact, let's take a look at that growth right now. So currently on the table is just over 65 cents a share. Last year, 3 of the quarters was 64. It was 62.75, 61.50, 60.25. So see, they keep nudging up their dividends. They do pay them quarterly. And the next date that we need to be looking at is April 6th. So we need to own on or before April 5th. We do own it now. We want to maintain that ownership. So let's look at the options chain. I was looking at 30 days out. So April 21st, 32 days out, sell, call. We have 14 contracts to work with. I was looking at a fairly conservative number of $40, okay? So currently Verizon's at 37.31, $40 bills right here. Let's look at Verizon and go like 1 month out and see. They've been, I think, fairly flat, a little down lately because the market, of course, has been trending ever so down. 1 month on the Verizon. And it shows that, what's the date here? So on February 21st, it was at 39.70 and has been lower and lower since then. Made a little climb here, which helps us get some sort of premium on those call contracts today. So I was looking at the $40 strike, 32 days out. It's only 10 cents per, but that's, just should be some extra dollar bills into our pocket, into the pocketbook. Bid and ask is tight. We'll leave it at the 10 and we'll try to fill those today, because if this goes red tomorrow, if the market's red tomorrow and Wednesday, then I've missed my chance. I've missed my chance on this 32-day trade on the Verizon. So we want to collect these $140 bills along with the next dividend payment. So let's do the math on that as soon as we make this trade. Covered call, 14 contracts, 10 cents per, and they filled. So there's $140, right? $140. And say you were able to collect $140 10 times a year. Okay, so theoretically we'd be close to 12 times a year. So that's because that's just over a month. But let's round it down to 10. So 10 times a year, that would be 1,400. Let's look at our current position again on the Verizon. So if you bought 1,421 shares today, that would cost you $53,031. So let me write that down, $53,025, 31. Just leave it at the $53,025. So $53,025 for 1,421 shares. And we said, what if we're able to make 140 excuse me, $140 a month, 10 times a year on premiums? That would equal $1,400, right? And then if we look at the dividend, and they're going to raise it at some point this year before this year is over. But for now, let's just look and go with the current number of 65 cents a quarter, okay, and $2.61 a year. So if we take 1421, that's the number of shares we're dealing with at this moment, and we multiply it by $2.61. So that gives us $3,708.81. And then we said we could approximately make another $1,400 a year on the calls, selling the covered calls. So if we add 1,400 to that, now we're at 5,108.81. And we said we would have to invest $53,025 in order to come up with the 1,421 shares. So we divide it by that investment of $53,025, and that puts us at just under 10% on our money for the year. So, owning those shares, that's kind of the foundation of the investment. And then the jet fuel, not even jet fuel, just the wind at our back, the tailwind of those premiums bumps this 7.09% up to nearly 10% conservatively, because we are looking at a 90% probability of profit on that trade. So 90% of the time, that trade is going to expire at full profit. So there we have it. It is right here. It is right there. And if we look down, it's currently lost $154 in value. That's okay. That's all right. Time will be back on our side, and that's because it's green today and it continues to be. So we'll watch that trade as we continue. That's what we have right here on the Verizon. Wanted to check in and get some action on those 14 contracts, since we just came off an expiration on Friday where we did expire 100% profit on the Verizon calls. Now we're going to try to roll it out again. We're going to spin that wheel of fortune on Verizon. We collected the $140 right here, and then we're hoping to collect the next dividend, which is going to be 65 cents per share on our 1,421 shares. So there you have it. Thank you so much for tuning in. Subscribe, like, comment, share, and we'll see you in the next video.